What's becoming very popular now, at least it's being advertised as something that's really a big deal and very popular, are CDs. As they, I mean, I keep getting emails about it all the time myself because they're going as high as 5%. Some, I think, even cracked the 5% to like 5.25% or something like crazy rates like that. I don't remember ever seeing rates that high for a CD. So, and this is a question that we've gotten several times. Are CDs actually worth it now, considering they're being paid out so much, and it's a little bit late to be jumping on the bandwagon for tech stocks, as you said? So, is what do you think about CDs at this point?
I'm a believer at this juncture in time. What is wrong if you don't know what to do on up? If you haven't participated in it, do you get in it now and take all the risk of what those seven stocks have done by buying, for example, the S&P that's up 14%, when you know that if something, God forbid, comes into the market that is negative, that, and there's many things out there that we all know. I mean, for example, possibly a conviction of Donald Trump, or an impeachment of Joe Biden, or a problem with an Apple phone for the Apple 15 that'll come out in the next month or so, or 2 months. So there's all kinds of problems that can disrupt both politics that will affect the markets, or companies that can affect the markets. Why would I want to be in the stock market sometimes when I can get 5% if I just go over to the bank for the next 6 months in a CD? That way, 6 months from now, you can make a decision if that's a good yield for you or not. But here's what that means, that CD means. That means if, say, you have a spare $100,000, you can go over to the bank, and 6 months from now, you get a 6-month CD. They're going to give you $2,500. That's what it's worth. Is that a good deal? Yeah, it is. The problem is that when you put money in a bank, you tend to keep it at the bank, and then when it matures, you might buy another one, and maybe that next one will also be 5%, and then you'll get another $2,500 after 6 months. The option and the alternative is to keep it in your trading account, and simply, if you have money there, and simply buy the near, or the what is it, the USFR, which are money market funds that are yielding, say, 4.5. That way, so it's not $2,500. You'll get $2,250 instead. And for me, for the convenience, I'd rather just keep my money in the markets and buy those things, which are, by the way, tradable. And if I need the money, I can do it tomorrow. Whereas a CD, you are penalized in the event that you might need the money at the bank. And just a heads up, 5% is a good yield, but I remember those things paying 15. So that is just a matter of age. And I think anybody that heard that number, if you see 15% on a CD, I highly recommend going out and buying one. 5%, you can get that in the market. So no real added value to me, but for the first time, yes, I can see why that's interesting. And by the way, folks, that's the money on the sidelines that everybody talks about that one day will come into the market. The difference is nowadays, 5% is a reason not to go in the market. If it's at 0.5%, of course, that's money that can go into the market. But at 5%, that money's going to have some stickiness because you're being rewarded to not go in the market.
Gotcha. What was that ticker symbol that you said again? That is
USFR, United States Federal Reserve, or it's offered by, I think, is it an iShares product? And it'll offer you about
4.5.
4.5. Yep.
4.5. I mean, I think I'm with you there. I actually didn't know. So I learned something today too, everybody. I didn't know what that was. I didn't know that ticker symbol existed, but I'd rather, for the convenience, I would probably happily sacrifice 0.5% for the convenience, right? If it's that close. But obviously, if we ever hit those crazy numbers where you hit 15 or anything double digits, that's a different story.